Welcome back to Where is the Money? So, the money is not with AI, or is it? I'm sure you heard by now that Nvidia has reached a $5 trillion market cap, which is unheard of because Apple was the first one to get to 1 trillion a few years ago. So, with that, there's been a lot of speculation in the AI community and on the investor side whether Nvidia can keep going to potentially a $10 trillion market cap. Now, a lot of people are concerned about this trajectory. A lot of people are saying that Nvidia is possibly tapped out and they're the only thing holding up the AI market from completely bursting as a bubble. Let's look at Nvidia's contribution to AI. Let's look at AI, if they made any money from the public sector or not, or if all the money they're getting is from private investors. Let's analyze this.
Okay, give me 2 minutes to explain to you this Nvidia AI bubble and how so much of the stock market and the entire US economy is tied to something that is about to crash and burst. All right, give me a moment. So, Nvidia makes chips, or they design the chips. They get the chips made somewhere else. So, Nvidia designed these chips. They design good chips, and they're powerful and they can do a lot of processing power. All right, but they make these chips, and then companies don't really have a reason to want these chips. People are like, why do we need these chips? In comes AI. So not too long ago, artificial intelligence has been a buzzword that has been created, and then Nvidia being the company that makes really good chips, some companies were just like, you know what, we're going to use Nvidia chips because they're powerful, because they will power our AI models, right? Keep stock price in mind here. Stock price is the most important thing for all of these companies and valuations. All right. So when a company announces that they're going to do something with AI, their price goes up. And then they associate their business with Nvidia. So Nvidia says, oh, we can make these chips for you. And then so there was some natural market growth. Then it reached a point where it's like, all right, Nvidia has grown significantly. Companies say they're going to invest in AI and we're all good to go. But shareholders want more value. So now what has happened is Nvidia ends up with a whole bunch of chips that they have the capacity to create, but people are like, why do we want them? We don't have the money for these chips. It's expensive as hell. What am I going to do? So in comes what's called vendor financing. So Nvidia says, you know what? OpenAI, I'm going to give you $100 billion. You're going to use that $100 billion to place an order with me and buy my chips. And then I'm going to make the chips for you to use to power your AI model. All right. No funds have actually been transacted between the two companies. OpenAI gave the money. Nvidia gave the money to OpenAI, and then they're going to get their money back. So no new money has been created. So now you have created a circle of demand. You've created artificial demand using vendor financing. So now multiply this across the entire industry of our stock market. Companies are using AI as a buzzword to increase their stock price. Nvidia is the company where people get these chips from or place these orders for chips from. So when Nvidia stock goes up, investors say, oh my gosh, look at how great this Nvidia stock is. I'm going to invest more money in it, which then makes Nvidia stock go up. So now Nvidia has all of this money that they are then loaning out using vendor financing to create a fake demand for their products, because nobody's actually really buying the products. They're placing these orders, and then people will go into the market and look and say, oh, look, here is $100 billion order placed for chips. Nvidia must be valuable, right? Not quite. They make a good chip, but they're making artificial demand for their chips. So now in comes the stock market, and I'm past 2 minutes, but give me a moment. I'm going to finish up in 30 seconds. In comes the stock market. Nvidia now makes up roughly 8% of the entire S&P 500, and then about 50% of the S&P 500, their value is tied to AI. So all of these companies are investing in AI. They're buying from Nvidia. Nvidia is giving to them. They're creating art infrastructure companies to build out these data centers, because the data centers have to be built using these Nvidia chips. So it's all of this ecosystem of companies trading money back and forth to each other. But what has not happened is income or actual revenue being generated from all of these tens of billions, hundreds of billions of dollars of investment. So what's going to happen is at some point, these companies are going to have to deliver on all of the money that they have spent, all of the promises that they have spent, all of the promises that they have made, and all of the data centers that have been built out to power all of these AI models. And then at some point, revenue is going to have to come in. When we realize that that amount of revenue is not going to be able to come in to refill these loans, and when we realize that Nvidia is giving people money to buy their stuff, it's going to be a problem. It's going to be an issue. Vendor financing, Nvidia, look into it. Our whole stock market is tied to this chips and to the AI speculation. And we will see where it goes, but it's not going to be pretty.
Now, the word that keeps coming up is synthetic demand. And they're getting that from they're not making money by people buying services with AI. It's all for build out in infrastructure. And at some point, all of these billions and trillions of dollars that all of these companies are investing into AI got to start making some money back. I understand they're still in the startup phase. And a lot of this is just going from business to business, B2B, all day long to build up the hype in the infrastructure. However, is that sustainable? Can you keep this going without selling to the public sector, or at least selling to other businesses, not Nvidia investing $100 billion into a company for them to buy $100 billion worth of chips from them just to keep the cycle going, just for the evaluations to keep pumping up, full of money transfers here to there. So will Nvidia be the downfall of AI because they're the only thing keeping it hyped up without official products with AI to bring it to the market? ChatGPT, OpenAI, these are all good, but they don't have any notable value to the consumers to make them want to do, I don't know, subscriptions to keep buying it or anything.
Is AI right now basically a Ponzi scheme? My opinion, not quite. A Ponzi scheme is fraud. It's fake cash flows, money that doesn't exist. What's happening in the AI landscape at the moment is different. It's more like a financial echo chamber. It's a loop. So here's how that loop works. So AI labs raise billions from investors. They spend most of that money on chips, mostly from Nvidia and AMD. Those chip makers, now flush with revenue, invest back into the labs or strike tight partnerships. And the same dollars keep spinning around in circles. Each cycle makes revenues look stronger, valuations are looking bigger, and the growth story looks unstoppable. So analysts are calling this synthetic demand because it isn't customers driving it, it's the companies themselves. And the actual products for now, like a lot of chatbots, a lot of tools that sound really futuristic, but they haven't yet bring in steady scaled revenue, which means the stock prices that we're seeing are powered more by the hype and recycled capital than by solid economics. And that's why this feels so much like the dot-com bubble. Back then, investors piled into internet companies with no profits, just promises. And the AI mega caps, Microsoft, Apple, Nvidia, the Mag 7, are now trading around 27 times forward earnings. And that's expensive, though it's not as extreme as 2000 when evaluations hit more than 50 times. So yes, it's a bubble. The tricky part is the timing. Bubbles can keep inflating far longer than you would expect, but the mechanics are classic: circular financing, unproven products, and a narrative that America itself is now a giant bet on AI. And that doesn't mean that the technology isn't real. The internet didn't die after the dot-com crash. What died was the snake oil. The real value emerged later. And the same may or will happen here. Right now, prices are being driven more by the loop than by the fundamentals, and loops eventually do run out of momentum.
What vehicle can you put AI into right now that makes people want to spend top dollar for it and or a subscription to keep it going? Because the thing about subscription model is that if they stop liking it or stop using it, they're going to unsubscribe right away. So that has yet to be seen. But synthetic demand is the biggest culprit on why people feel like Nvidia is going to cause the AI bubble. We seen Amazon just inked a $38 billion deal with OpenAI for Nvidia chips. So everybody is trying to get the chips, and that's where all the money is going. But is that a bubble though? Is it all hype? Will it perform and become an industry of its own? Now let's go over and hear from Mark Cuban about his thoughts about the AI being a potential bubble, and if he feels like Nvidia is going to contribute to that bubble or not.
What's going on in AI is astonishing. The amounts of money make the internet look like penny
Yep.
poker. It's crazy. And this new latest thing that's come out is now Nvidia, the chip company, is committing to giving $100 billion of cash to its biggest customer to then turn around and buy its
their
chips.
product.
It's
That sounds like
incredible.
the internet. That sounds
Oh my
like the internet.
goodness, I
Yeah.
know, but it's the kind of thing that after the internet wreckage was all over the place, everyone's like, "Oh, this was the problem, and this can never happen again." And here it's happening
right.
again at 100x. So, question for you is: does it look like a bubble to you?
No.
No.
So okay, there's two sides of this question here, right? There are the public companies, the Mag 7 that are in this death war to see if they're going to win. They already have sustainable ancillary businesses that are the core, right? Amazon has Meta has Facebook and Instagram. It's not like pets.com, right? Or broadcast.com. It wasn't like, we were all in on one concept. You don't see that with AI right now in the public markets. In the private markets, yes. And so if we were where we were back in 98, where there are 8,500 public companies and companies were coming public every single day the market was open, then we would definitely be in a bubble. What's happening now instead is, all the pitches I'm getting, AI this, AI to understand what your dog says, AI for wellness, AI for you name it, right? For your basketball shooting. Those are all private companies that don't really have prospects of going public in the near term, if at all. And so there are bubbles in the valuations there without question. Like startup pre-revenue stuff is coming in, $30-50 million market caps for nothing all that spectacular. And so they're going to fail, right? But in the public side, I don't see it as a bubble.
Right. So it's happening in the private market. And at some point, we probably get a big correction and most folks get wiped out. And everybody seems to agree with that. Do you feel like, based on your sense of the private market, are we getting close to that 1999 peak, or are we in 1997? Which is, by the way, I'll give my view. Who knows the future? But that's what it feels like to me. It's like 1997.
No, and here's the reason. Here's the difference, right? So like 95, 96, 97, there was always new technology to keep things going. Like with broadcast.com, there was, new streaming methodologies. There were new broadband methodologies. There were new servers that kept things going. And then things kind of slowed down and came to almost a stop, and your business had to stand on its own. With AI, the technology continues to change rapidly. You're seeing technology changes in terms of how models are trained and how they're made more efficient and, can generate more tokens for less money and all that kind of stuff. And I don't see that slowing down. And so because that's not slowing down, there's always going to be a way to improve what you do with AI in your private startup.
So Cuban does not feel like it's a bubble yet. He feels like it is a lot of hype, it is a lot of speculation, but that's for any market, especially new emerging markets. And then he made mention that the companies that are using the chips, that are getting and trying to implement it for public use, those companies with large evaluations based on being involved with AI can definitely become the bubble. But he doesn't feel like the infrastructure from Nvidia side and OpenAI side, the infrastructure that allows these businesses to exist, he don't feel like that's a bubble just yet. I disagree, but we'll take Mark Cuban's thoughts on it for the time being. What do you make of this? You tell me. Put your comments below. Let's talk about it. This is Where is the Money? Talk to you soon.